How many trades do you take in a day on average?
Uh, maybe two trades.
Oh, two is good. Two is good. Two is
Two,
very
yeah,
good. I
yeah.
maybe thought since you're trading on the 15-minute and with the indicator and everything, you probably be trading like 10, 15 trades.
No, no, that's too much. Once in a while, three, but I discipline myself. I used to do that, yeah, but I discipline myself. And the last time when I lost the account, I'm like, okay, I already won $150. I cannot continue. It'll never end. I need to get to $800,
Mhm.
8%. And oh yeah, there's no time limit. Okay, I got it. But
Okay,
why
but
did I get so much? Yeah.
so how come there's no time limit? Were you in a rush or how did you build the account? What happened?
I all of a sudden something came to my brain. I said, it's been 2 months. I go up at 100, I go down 100. Like it's I'm breaking even overall average, and I'm going nowhere. And it's time for me to put all the all the the odds into the table. Like a gambling casino.
Yeah, you went big.
And, and you know what I did? I just put my bets, and I didn't put any stop limits. I said, this is it. It's either all or nothing.
Yeah, that happens to everybody. Exactly.
Oh my
That happened to
God.
me.
And
That happened to
it,
me a long time ago. It
and
happens.
dumb me, after all these few years that I'm doing it, to still, I'm like, why did I do it? Why did I think that, like, I need
Yeah.
to get a new account? I can't stand this account. In my brain, not thinking, no, normally at that point, and I need to work on it. And I learn my lesson again, and I
So what account were you trading?
it's a $10,000 account,
So what lots are you like do you trade on? How
Uh,
lot?
point two, I was fine with point two average, 0.2, and I did fine. I did fine. I didn't make money, but I didn't lose money. It was up and down, and I was one time $300 down. That was the worst, and then I got almost to $300 up at the best, but I didn't lose the account, which was great. It's been 2 months and didn't lose the account, and so that was a big change for me. But at one point I said that, how long is it going to go? I got to make a big move to pass the challenge.
Yeah.
And yeah, yeah, big move, big move. So
Well,
it's okay, no big
yeah,
deal.
yeah. On a 10K account, I 0.2 is kind of small for me. I just want to do it. It's either do it or I don't. So I don't want to come on here and make it $2 on a 10K account or $5 or $15 on a 10K account. Nah, so it's either I make it or I don't because I don't have time. If I pass this account, I'm going on for the next. That's what I do. So I'm just stacking up capital and stacking up capital.
Uh-huh. And so 2.2 is on a account like that, is it's too small, you think?
Yeah, yeah. It's too small because I trade the 4 hour time frame, and sometimes I don't even have to set up an entire day. Like today, sorry, to this coming week, maybe tomorrow Monday, there will be no setups looking at the market. So let's say like Tuesday now we have a setup, and probably that'll be like the only setup in like 2 or 3 days. So that one setup, I want to make sure that it's I'm going good on it. So it's not
I
like
see.
I'm over risking or anything. I'm making sure that whatever I'm trading, whatever lot I'm using, I'm putting 1% of that account down. So even if I'm using 0.01, I'll open a good number of trades to make sure that I use max out all that 1% I want to use on that trade. Or I'll just open two positions. So I'll make sure that I'll calculate my risk and make sure that these two positions that I'm opening, following this pip size and this stop loss and everything, I've done the math. And if I'm to lose this money, it's 1% of my capital and I'm comfortable with it. So following the instrument that I trade, so the lots will vary.
But on the half on the 4 hours, okay, so 1% for me would be 80 let's see, $80.
1%, 1% on a 10K account.
Well, it's a $100, but it's so easy to run through. If you put 0.3, 0.4, I mean, it's so easy to be out of the market very quick on the 4 hours. I mean, the fluctuation is pretty big.
Yeah,
So
it's
how
pretty
do you?
big, but it's a very mechanical, and price is fractal. Price is very fractal on every time frame. So on the same thing, the same way you look at the market on the 15 minutes, just the same on 4 hour. So
yeah,
really
but
not
on well, on the 15 minutes though, you know, a 1% on the 1 hour, the fluctuation is much bigger, isn't it, than the 15 minutes?
It's much bigger with smaller lots. With smaller lots, even though the fluctuation is bigger, it takes time. Maybe my stop loss could like take an entire day before it even hits. But the same amount of money that I would have lost on the 15 minutes, that would stop maybe on the 15 minutes, I open a trade. Let's say that trade stops me out in like 10 minutes or 20 minutes after I open it. On the 4 hour, it takes me like 4 hours or 6 hours before my stop loss gets hit. It's the same amount of money that I will lose on both trades, because on that smaller trade, I'll be risking the same 1%. On this 4 hour, I'm still risking the same 1%. The only difference for me is because the 4 hour is bigger and it has more, it silence all the noise in the market, but I'm still trading the same amount of money that if I go on the 15 minute, I'll still trade. So the money, what I put on the market doesn't change. It's the same thing.
Same thing. Okay. All righty. Sometimes do you trade the 1 hour or just 2 or 4?
Yeah, 1 hour, but it's really rare for me. I don't really like the 1 hour that much, but I still go on the 1 hour sometimes. But I spend majority of my day on the 4 hour and 2 hour, but mostly the 4 hour time frame.
Okay. All righty. Well, time to start a new week.
Yeah, new week. So last week, I think we took a total of 3 trades last week, and we lost 1 and we won 2. We won 1. That means 1 went to TP1 and TP2, then the other one went to TP1. So if you put everything together, that's like 2R. Then we lost 1R on another trade. So we're up for the week last week. So that's how it works. You just want to win majority of the trades. So you win the day, you win the week, you win the month, win the year, and that's it.
Yeah. Okay. All right. Well, that's basically all my story for this week. Nothing much.
So what are the difficulties if you're doing well with because from what you're saying, it's like you're doing well with the strategy you're using. I cannot tell you to change it or anything. I feel like you have more problems with risk management or your trade management. I don't know if you have, or you do face any difficulties in that area, or if everything is intact.
I know what needs to be done. It's just my psychology. So yes,
psychology.
It's there. I just have to discipline myself, but I understand what needs to be done, and I have to keep of course, the lots as as you said, 1%, no more than that. And I'll try to look for to trade the 2 hours or 4 hours, and see if that works better for me. Yeah.
Okay.
Yeah. So
I don't fluctuate my strategy. I don't change anything. I don't modify anything. My strategy is really like something that I've used to pass so many funded accounts. I've made so much money with it. Yes. So it's something that I trust, I believe in, and that's why I'm out here struggling to spread it, struggling to share it out there, because I believe in it so much. And I'm trying to change the narrative in a lot of things right now, because people are being misguided out there. People think that support and resistance, everybody thinks they know how to trade support and resistance. When somebody hears me, if I tell somebody I'm trading support and resistance, they'll be like, ICT is the best, ISMC is the best. Support and resistance doesn't work. Everybody does it. Yeah, everybody does, but they do it in the way, or they do it the social media way, they do it the YouTube way. They'll just come on YouTube. What they tell you to trade on support and resistance is look for swing points, swing lows, where you have the market push away, like we have a high like this one. So don't just randomly draw that as resistance right there, because the price made that high and it has dropped massively after that. So that's resistance for some reason. Then maybe down here, they're like, okay, we have this low. This is support. Then they'll look at this high here. Maybe there's another low tapping it somewhere. Like they just randomly draw points in the market that are very obvious to everybody. Everybody see these levels in the market, like this one here. Okay. So now this is probably somebody's support drawing like this, because this low is in here, this high has been tapped, then this lows as well. So now this is somebody's support right here. Okay. Now what they're expecting to do now, they're expecting to catch this market They want this market to dip in here, then they catch it all the way up. That's their own narrative. That's how they see support and resistance trading. They think it's like just these random points in the market where the market has faced rejections. But that's not even what I trade. I trade support and resistance, but I trade it in a very, very mechanical way. Like, I trade it differently. The way I trade if somebody that trades support and resistance sits with me and we take different trades, even though we're trading the same strategy, I trade differently. See? So for me, I'll not come on here. Like, let me show you something real quick. I'm trying to show an example of a random support area that everybody will think is support for some reason and they'll trade it. Okay, like this one. Everybody will think this is support for some reason. Resistance, sorry, because we have 1, 2, 3 here, and they'll still be looking to sell here for some reason. Because now price has rejected this area 3 good times, and you can see here price pushed pretty nicely. So now they think it's too simple because everybody can see this, everybody can draw this out. But majority of people still don't trade it. The majority of people still don't make money doing this. So they're like, support and resistance is too famous. Everybody knows it. Everybody trades it. And it doesn't work and stuff. Because everybody that gets into trading, this is the first strategy they learn. So they feel like learning something abstract or different like ICT, Wyckoff, SMC, and all of these things is what's cooler. I'll take it like 1 to 10 or 15 R on a trade is that's what makes you profitable and everything. But I have a way to disprove everything, and I have a way of trading my own markets, and the way I trade is very, very different. Okay, all the setups that I sent you guys, if you look at them, I already explained everything to you guys. When I come to the market, this area here, this is what I'm interested in. This is what I trade. Okay, but support and resistance traders don't trade this. What they want is maybe to see like swing points. That's what they're really paying attention to, the swing points in the market. But the swing points in the market is just a trap. We all look at it and we see it fail. Everybody trades it, everybody fails. It doesn't work, everybody's frustrated, and they're looking for indicators here and there. It doesn't work. These things are not, this is not what moves the market. These swing points here. It's just how you read price. You can use the swing points to read price. Where is the price going? Which structure is it making? Is it breaking upward or downward and stuff? That's just what you can use it for. But what you really trade is liquidity. You trade liquidity in the market. You trade the noise in the market. You trade the saturation in the market. So that's what I look for. I look for areas like this one. I look for choppy price action, which is what everybody's running away from. Instead, this is what attracts me. So when I come out here, I simply spot areas that I see the market being shying away from, like this one. You can see here that there was a lot of opposing energy introduced here, trying to push these candles down, and it succeeded in doing that. The price never broke off from here. So the only thing that made it out of this level here, if I put a line here, if I put a horizontal line here, the only thing that made it out here are wicks. Wicks, candles never closed out of it. So wicks will succeed in going through, but there's something that will cause price not to close there. It's going to push price and close it here. I'll be like, okay, this is where you belong. You're not going beyond this point. This is your max point. So now there's a reason for that. So when I see this in the market now, I know, okay, there is an invisible force sitting above price here, making price not to go down, but I cannot see with my naked eyes. So it's my job as a trader now to come on here and highlight it or make that force visible. And that visible force now, I'll draw it out like this and be like, this is the guy sitting here and blocking price that I've been unable to see. So now I'm just trying to make it visible for my eyes so I can see it. Then I know that, okay, if price comes back here, okay, something good could happen. And that is how we cut this trade. I think we took a trade here. It's one of the trades that we took. We sold here, pretty nice. So, and another trade, okay, this is another trade that we took that didn't work out. This was one trade that I took. I shared it. This trade went and stopped me out. I mean, immediately stopped me out. It dropped. Look at it. So when it dropped immediately. So when it came back, I still sold it here. So I got my money back either ways, and that worked for me. So now this is my resistance area. I'll come down here. So a random person would just be like, maybe they don't even look at this area for any reason because it's just wicks. People don't really care about wicks. But in this market, I don't look at candles. I look at wicks. When I'm drawing my key levels, I draw the wicks. When I'm trading the wicks. That's all. I don't trade candles. I don't care about candles.
I see.
Here I have wicks. I draw my wicks out like this. I can just draw like this. Bam. When next, this is an alert. You can see this dotted line here. This is an alert. If price triggers this alert, I'm buying this area here, and I'll make money on this trade. I know that I'll make money on this trade. How did I know that? I'm not saying that I'm going to catch this move, or I'm not predicting that this price will push all the way up here. I'm just saying that if this price pushes up like this, boom, this is enough for me to make money here. This tiny move here.
I see on the week, right?
Yeah. So if price enters,
how do you know sorry? How do you know it's a week before it's a week? You know, like later on you can tell. Oh, that's what the week. It could go down further. You know, like it could. How do you know? How do you realize this is only a week?
No, I don't know these things. But what I'm saying is, when the candle opens up, it forms the wick, then closes out. Like this is where the candle closes.
Then you take it.
And so this week here is just to serve as proof that okay, I was here, but I was unable to close here. I was unable to colonize this place. But it's just a mark for whoever is coming here to know that I was here first. So these are the wicks here as evidence that these guys made it down here, but they were unable to close here. So now that same reason why they were unable to close is what I am capitalizing on. That's what I'm marking out on. So I want price to dip in here. I'll buy these wicks up here. So I'm not buying these wicks to take it to the move. I'm just buying it to push a bit. Even if it pushes just 1 hour, hit my first target, I break even with the second target. My capital.
One second, Ghislaine, 1 second. We have an earthquake here.
Hey, oh my God, really?
Yeah, 1 second, 1 second. That's the place is shaking.
Oh my God.
Yeah, 1 second. Okay, it's subsiding. That's fine. Hopefully not back. All right, go ahead. So okay, so where would you enter here in the when would you enter here in this example that you show me? Can you point me the point where you get into this?
So this is what I do. I have a tool here that I usually talk to you guys about, this thing that I made myself. So I'll just like have it set like that. I'm looking to enter a bit deeper in the zone, but I'm not looking to enter straight up at the midpoint because price might not make it up to the midpoint. So this is where my entry will be. Let me take this down. So my entry will be somewhere around this second line. That's like in the middle of this thing.
So you do enter on the week itself, right?
Yeah, I enter on the wicks, not the candles, just the wicks down here. That's why I trade. Pardon?
Yeah. So you know, so how do you know it's, as I said, how do you know it's a week when while it's happening, it's not clear that this is a week?
Okay, I get it. No, I see 2 weeks formed first before I get it. That is, I need two confirmation. This first one, you never know. I'll wait for it. The second one, I'll wait for it. So after this has formed, this is where I'm about to enter now.
Yeah.
I come after they have formed, then I confirm that okay, this area has been rejected twice, and I see wicks. If you watch the last video that I sent in the course group, I explained this. I have 3 rules that I made there. So I want to make sure that my zones are on the 4-hour time frame. I want to make sure that my zones have rejections, 2 rejections from it. And I want to make sure that these rejections contain wicks. And now this fills up all of that. And I also want to make sure that if I go down on a smaller time frame, like the 2-hour time frame, this level is visible. And it's visible with wicks as well. You can see here, even on the 2-hour time frame, the wicks are visible. So if you came on the 2-hour time frame and there were just candles, no wicks, then it's really risky.
It's risky. I see. So you really look for those wicks, right?
Wicks. So when I tell somebody I trade support and resistance, I'm just telling the person indirectly that I trade wicks in the market. I don't trade candlesticks. So when price comes down to this set of this particular trade you're seeing here, I'm going to have a first target, which is 1-to-1 around here. You know, that's the highest. Like price always makes it to 1-to-1 majority of the times. So when price bounces from here now, sorry, where this thing was, when price makes it into this, my entry here, and it makes it all the way to my target 1, my first target, I'll move my stops to break even with the remaining positions because I'm opening 2 positions. I'll close 1, or I can still open 1 position and I take partials. Either ways, but I like to open 2. I'll open 1. I open 2 positions. I close 1. When target gets hit, then the remaining position, I close out all my risk and make sure that if this trade is to reverse on me, I've taken partials, and those partials I could put them on my next trade, or I could even reverse. I could withdraw them because if I'm trading a large funded account, that just this moment I've made here could literally pay my rent for like 1 or 2 months. So yeah, so that's my mentality. I don't look to cash trades that go all the way to resistance or like 5,000 R. No, I just make sure that I have a good amount of capital that I've already secured, And I know that, okay, from here to here, just a small pip, I'm okay.
Yeah.
I'm okay. If I can take this on 10 or 5 trades, I'm okay. I'm up for the week. I'm up for the month. So we have a support area here now. Now, before I enter my trade, I have a plan. So what's my plan? My plan is that if I'm looking to buy this area, of course, because price is above it. So if price comes, this is my plan. I'm looking to buy this area. But now, what if price just slices down this thing with a lot of volume and doesn't stop here to, you know, whatever? I'll take a look on that trade. But one thing is for sure is price moves in structure. That means there's a high, there's a low, there's a lower high, there's a lower low. Like in this case, we have a downtrend here, as you can see. So when price took out, when price took out this low, you notice that price retraced back to pick up more orders. It retraced back to fill up other orders up there, sweep whatever liquidity is there to fill up any imbalance or anything and drop. Same thing here. When it broke structure, it went back up. It grew. So that's what I do. So I have a structure here. I have low here. I know that if price breaks it, there's a high probability that price will come back up. So I wait now and say, okay, this area is a very important area in this market. This is a very important area. If price breaks it, if I'm going to buy trade here and I get stopped out, I'll place my entry back where I placed it. I'll place my entry back in here for a sell. Then my stop loss will be up here and my target will be down. And most of the times when I get stopped out, I take my money back on that same setup.
I see.
Yeah, because price will come back there and I'll make my money. So when I got stopped out on this trade here, this one that I sent, I was pissed because price went like just one candle, it just dropped straight to my target. And it was really disturbing, but I didn't focus on it because I won several trades before that. So it does not really disturb me. But now my plan for this trade was if this candle could close out here, then I see another candle close. I need 2 candles to close out. So if we close 2 candles, then I would have bought this place, but it did not happen. So I didn't take any trade again.
Mm-hmm. You in this case also you would trade the wick on the upper wick also, or just the bottom wicks? Right there.
Both. Where? This one.
In the middle more.
This one's.
Yeah, no, the big one all the way to the top.
This wait.
Yeah. Would you trade it to sell here or?
Yeah, this one.
Yeah.
No, I don't really pay attention to this one. I pay attention to more wicks. I need more wicks in that area. I don't need just one wick.
I see. The other one? Second one?
Yeah, I need accumulation. I don't need just 1 week. I don't trade 1 week. I trade a bunch of weeks. Let me see if I can look for other setups that I sent out. Let me see. So this thing is very, very mechanical and practical. Okay, let me show you another trading example here. Another trading example here. Now, let me stretch this out. If you look at this market here, you will notice that we have swing points in this market and we have